Welcome back, everyone, to the deep dive. Ready to get our hands dirty with some personal finance.
Let's do it.
All right, so we're going straight to the source today. No fancy textbooks or complicated jargon. We're diving headfirst into the Wikipedia article on personal finance.
Sounds good to me. Straightforward and to the point.
Exactly. And by the end of this deep dive, my goal is that you'll walk away not only understanding the core principles, but also why they matter, especially in today's world.
Totally. We'll break it all down, give you the knowledge to make smarter financial decisions and hopefully a more secure future.
That's the dream, right?
Absolutely.
Okay, so let's jump right in. First things first, what exactly is personal finance? The Wikipedia article defines it as the financial management that an individual or a family unit performs to budget, save, and spend monetary resources over time, taking into account various financial risks and future life events. What stands out to you in that definition?
I think the key takeaway there is the long-term perspective. It's not just about managing money today, right? It's about making choices that set you up for a stable financial future, building a solid roadmap for your life journey.
I love that analogy, a financial roadmap.
Yeah.
And speaking of roadmaps, often that journey starts with some pretty simple rules. The article highlights advice from Harold Pollack and Helene Olin, and they believe that the most crucial personal finance tips can actually fit on an index card.
That's amazing. An index card.
I know. Pay off credit card balances every single month. Save 10 to 20% of your income after taxes. Maintain an emergency fund. That covers at least 6 months of expenses, and max out those tax-advantaged savings.
Okay.
We're talking about the 401ks, the IRAs. Why do you think these seemingly basic rules have such a huge impact?
Well, they really form the foundation.
Right.
Consistent saving, avoiding that high interest debt, preparing for the unexpected, it's crucial. And by maxing out your tax advantage savings, you're ensuring you're taking advantage of every opportunity to grow your wealth over time.
And that long-term growth, that's where it's at. Now, the article also gets into investing, and I think they suggest a strategy that might surprise some folks. They actually advise against trading individual stocks, instead focusing on low-cost, diversified mutual funds. Can you break that down for us a bit?
Sure. Think of mutual funds like baskets of investments. They pool money from multiple investors to buy a mix of assets, stocks, bonds, things like that. And this diversification is key because it spreads your risk. If one investment doesn't do well, others might pick up the slack, and it creates a more stable return overall.
So you're not putting all your eggs in one basket.
Exactly. And then choosing those low-cost funds is crucial too. High fees can really eat into your returns, especially over the long term.
Gotcha. So it's about playing the long game, not trying to time the market or pick individual winners.
Exactly. Make consistent, informed investments over time and let the power of compounding do its thing.
Love it. Now, the article also lays out a 5-step personal financial planning process. I really appreciate how it emphasizes that this isn't just a one-time thing, it's an ongoing process.
Absolutely. It's a continuous cycle. You're always assessing, planning, executing, and adjusting.
Right. So the first step, taking stock of where you stand right now. Income, expenses, assets, debts, that whole picture.
Right. And then you set your goals. What do you want to achieve, both in the short term and the long term?
Yeah. And step 3 is where you create the plan to reach those goals. Maybe that involves budgeting, exploring ways to boost your income, or figuring out your investment strategy.
Yeah. And then comes the execution phase, where discipline and consistency are key. And finally, regularly monitoring and reassessing as life happens and things change.
That is, stay flexible.
Exactly. Personal finance is dynamic. Your plan needs to reflect that.
Couldn't agree more. Now, the article really drives home the point that personal finance is more important than ever, and they give 3 big reasons. Lack of comprehensive formal education, a shortened employable age due to automation and all the global shifts, and then people living longer, requiring those larger retirement savings.
Yeah. So many people enter adulthood without a solid foundation in personal finance, and it makes self-education even more crucial now. The job market's changing. People might be planning for a longer retirement than they used to. And with people living longer, yeah, those savings have to stretch further.
It's a whole new ball game.
Yeah.
So it really underscores the need to take ownership. We can't just rely on old systems or assumptions anymore.
No, we got to be proactive and informed.
100%. And that's why I think these deep dives are so valuable. We're trying to give you the knowledge and the insights to navigate all of this.
Right, and ultimately build a more secure financial future for yourself, for your family.
Absolutely. Okay, so we've covered the foundation. We got the basics down. But the Wikipedia article doesn't stop there. It goes deeper. It dives into specific areas, like one that really caught my eye, depreciating assets. We hear about it a lot in business, but it applies to our own finances too, right?
Absolutely. A depreciating asset is something that loses value over time, like your car.
Oh, yeah.
The minute you drive it off the lot, it's worth less. Electronics, boats, even some appliances, they all fall into this category.
So how does this knowledge actually affect our everyday financial decisions?
Well, you have to consider that depreciation, especially when you're making big purchases. Say you're buying a car.
Mm,
You don't just think about the sticker price, you think about how much value it's going to lose over the next few years.
right. Makes you think twice.
Exactly. Helps you make a smarter choice. See if it aligns with your financial goals.
So it's not just the initial cost, it's the long-term cost of ownership, right?
Presumably.
And the article highlights that it's about balancing those depreciating assets with investments that actually appreciate over time.
Right. Things like stocks, bonds, real estate, that kind of stuff.
Diversifying that portfolio.
Exactly. Having those things you enjoy is great, but got to balance it out with investments that can build wealth.
Absolutely. Let's switch gears a bit. Education planning. The cost of education these days, it's a big concern for a lot of people. The Wikipedia article talks about some strategic ways to save for those expenses, like 529 plans, for example.
Yeah, 529 plans are fantastic. They offer those tax advantages. Your savings could potentially grow much faster. Really useful for, parents, grandparents who want to help ease the financial burden of education.
Make a real difference.
Yeah. And the article also mentions being careful about certain decisions that can impact financial aid.
Oh, right.
That whole process can be tricky, so seeking expert advice is always a good idea if you're not sure.
Definitely. And speaking of big decisions, the article also talks about real estate planning. I mean, for a lot of folks, their home is their most valuable asset. And it digs into that classic debate, renting versus buying. What are some of the insights they offer on that?
Well, it presents both sides pretty fairly. Buying, you have the potential to build equity, you get that stability. Renting gives you flexibility, lower upfront costs, It really depends on your situation, your goals, how much risk you're comfortable with.
So many factors.
It's a big decision. The article also emphasizes really understanding those mortgages,
Ah, yeah.
the different types of loans, comparing interest rates, the terms, closing costs, all that. You want to make sure you're getting the best deal possible.
It's about understanding the long-term implications of those choices, right?
For sure. And it also talks about the importance of location in real estate.
Oh, right. Location, location, location.
It's not just finding a house you love, it's the neighborhoods, schools, amenities, things that can affect the property value down the line.
So important.
Thorough research is key. You're making a big investment.
Absolutely. So we've touched on a bunch of areas from this Wikipedia article. What have been some of the biggest takeaways for you?
I think one of the most powerful things for me is that it emphasizes personal finance as a journey, not like a destination. It's not just about hitting some magic number. It's about making good decisions, building habits, learning as you go, and being adaptable.
Yeah, it's a process.
Exactly. And I think it's empowering to realize that you have the power to take control no matter where you're starting from.
Love that. As we wrap up this deep dive into personal finance,
Mhm.
something that keeps coming back to me is how much it all ties into our mindset.
It's not just about the numbers, right?
Oh.
It's how we think about money, how confident we feel in managing it.
There's that saying, whether you think you can or you think you can't, you're right.
Exactly. Our mindset really shapes our financial reality. If you approach it with fear or anxiety, it often leads to, bad decisions or just avoiding it altogether.
Yeah, just putting your head in the sand. But having a growth mindset, believing you can learn and improve your financial skills, that's what empowers us to take those positive steps.
It's so powerful, and I think it's often overlooked.
I agree. So as we wrap up, what advice would you give to someone who's feeling overwhelmed, maybe even a little discouraged about their finances?
Start small. Don't try to do everything at once. Pick one area. Could be creating a budget, paying down debt, starting that emergency fund, and break it down into small steps.
Manageable chunk.
Exactly. You build momentum, you start seeing those small wins. It makes a huge difference.
It's encouraging.
Yeah. And remember, you don't have to do it alone. There are so many resources out there. Financial advisors, online tools, books, podcasts like this one.
Reach out, connect with those resources.
Exactly.
Well said. Well, thank you for joining us for this deep dive into personal finance. We hope you've learned some valuable insights and, most importantly, feel empowered to take control of your financial future.
Absolutely. It's been great exploring this with you. Remember, knowledge is power. And when it comes to personal finance, that power